think M&M is the next conversation, right? The reported sales for the month of May, they're better than expectations for both segments, auto and tractors. The company continues to gain market share led by strong continued demand for its SUVs. My colleague Sudarshan spoke with Nalinikanth, CEO of Mahindra Automotive, began by asking their outlook for the month of June. Listen in.
May has been a solid month for us, both on the SUVs, on the LCV front as well. On the SUVs, we sold about 52,431 SUVs at a growth of about 21%. On the LCV, less than 3.5 tons, again, we had strong growth, 8.8% growth year on year for us. So the portfolio has had strong traction and continues to be the case across all the different models that we have, including the two new BEVs that we put out there as well. In the analyst meet in May, we had projected that we'll do mid to high teens growth and volumes on SUVs. So with these numbers and what we are seeing out in the market, we are optimistic that we'll be able to deliver on those numbers for the year.
So for the next few months, what would be the most 2 to 3 important triggers that you think that's going to help the sales positively?
Yeah, absolutely. So Sudarshan, if you look at it, last year we had 4 major launches. We had 2 major ICE launches and 2 EV launches as well. So we had the 3XO we launched in late April, early May. And we had the ROXX we launched and started deliveries in October. And then in Q4, we launched both the BEVs, BE6 and XEV9e. So for us, the most important thing is capturing the demand in all of these 4. ROXX, we had about 6 months of volume last year. So we get the annualized benefit this year of the full year's volume on that. XEV3X, of course, is doing quite well. And we have increased capacity, especially on the petrol front. So that gives us an additional room to increase volumes as well on that. And then the 2 XEV and the BE, we just started deliveries in late March. And we are already number 1 in terms of revenue market share. So we're seeing strong growth there as well. So key is to get these 4 models to deliver the volume growth for us while we continue to have very steady and strong traction with our Scorpio portfolio and the XEV portfolio.
I'll be coming to the market share, but before that, I would like to talk more about EV sales, because you do mention that your utility vehicle numbers do include EV sales. But can you talk about EV monthly run rate?
Yeah, so for us, as you know, we are only an SUV player. So all our EVs are SUVs as well. And our numbers, if you look at it, we delivered very close to 4,000 vehicles last month. And we did about 3,500 or so in April as well. So we are on track to having full utilization of our operationalized capacity. And if you recollect, we have an operationalized capacity of about 5,000 to 5,000 vehicles, 5,500 vehicles. And so we are hopeful that very soon we'll come very close to utilizing the full capacity of our plant for that.
Okay, now coming to the market share. It's been a healthy gain for both. If I can see that in April and May, PV market share has jumped by 3.4% year on year. Even on monthly basis, it's up 0.4%. Even EV front, it's a gain of almost 15% YOY and 3% month on month. Any target that you have set by the end of this fiscal, what do you think would be the exit market share for both PV overall and EV front?
Yeah, so market share for us is an outcome of the traction we see with our customers on our portfolio. So we don't necessarily put out a target for what our market shares need to be. We're focused on delivering on the volume projections that we put out there, and most importantly, on delivering to the customer expectations in terms of their bookings as well. So that's really what we are focused on. Now, of course, as we see what the industry projections are and the overall numbers, if we continue to keep this kind of pace and we do mid to high teens, I would think that there's a natural conclusion that there shall be some market share. But that's not necessarily something we're chasing on an ongoing basis.
And how is this raw material cost trend looking like in this environment of where Trump every another day is announcing tariffs on several, so many products? So how is this raw material cost looking like first? And second, any pricing action that you are planning over the next few months?
Yeah. So firstly, it's a highly dynamic situation at this point in time. And it's hard to predict what will drop at what point in time and what we need to go do. But we, of course, saw some steel price inflation that happened in the earlier part of the year. And that's something we have passed down to customers in May. So we did a series of price increases in May. And it's heartening to see the kind of volume growth we have seen despite the price increase we put out there. But going forward, while it's hard to predict, we are reasonably confident it will be a benign environment overall. And of course, if there's any disruptions on specific commodities or any specific strategic components, we continue to watch it very closely. We have a playbook we put together for COVID, and we know exactly how to operate in an environment where such black swan events happen. So we will pull that playbook and work with that.
So which market, if I talk about north, south, west, east, which is the one or two markets that are basically helping you post out such a strong set of numbers?
Yeah, so what's very helpful and heartening for us is we are seeing growth across all of the different regions in the country. North, of course, has always been a backbone of our volumes, and that continues to be strong. West and East have also been quite strong for us. If we had to point one region which has really helped us grow, at least for the last few quarters, is South. And South is traditionally an area where we have punched a little bit lower than our weight, if I may put it that way. And really that has kind of stepped up here, both on the SUV side and also on the LCV side. If you see, we had significant gains on the LCV less than 3.5 tons of market share. And a large part of that came from the traction that we are seeing with our products, especially the new product, which is Vero, in our South markets.
Great. On EV front, over the last few days, we have been hearing from some of the two-wheeler companies regarding rare earth magnet supply. And because of the disruption that they are expecting, and they believe that if the disruption continues or disruption they might face over the next few days, it might have an impact on their sales. Are you expecting the same?
Yeah, so as you pointed out, China recently implemented an end-use requirement, end-use certification for all exports of rare earth metals. So that requires additional clearance with our customs agencies. We at Mahindra, we are covered for most of our vehicles for the next couple of months in terms of existing stock, so we are comfortable there. And most of our suppliers either have applied or in the process of applying for that end-use certification already. So that's a process which is underway at this point in time. Of course, we are also deploying other de-risking strategies. We are looking at alternate materials. We're looking at sub-assembly buying from other suppliers. But we're also working very closely with the government for faster clearance of these end-use certifications as well. So it's a multi-pronged approach we're using. But for the next couple of months, we are covered.
Great. Now, coming to the CV segment, so your main segment, that is the LCV between 2 to 3.5 tons, there I can see that you have been posting healthy growth. Even in the month of May, you have seen a growth of 14%. But one segment that is less than 2 tons, there you have seen a decline of 18%. And in the segment of more than 3.5 tons and MNHCV, there it's just subdued growth, it's just 1%. So, by when do you see that these two segments, okay, we can consider that 2 to 3.5 tons, you might continue to see healthy growth. But overall, if I talk about CV, how do you see that overall demand looking like first? And what would be your basically industry outlook for FY26?
Yeah, so I'll limit my commentary only to the LCV less than 3.5 ton, which is the core business that we are in. Vinod runs the MTBD business, which goes beyond that. But our projections is about high single-digit growth is what we're projecting at this point in time. And there's a couple of reasons for that. One is we've had a fairly muted set of years on the LCV side for the last 2-3 years. And at some point in time, the replacement cycles need to kick in. And we're hoping this would be the year when we start to see some of the replacement cycles coming in. That should give us some volumes. Second is overall, the rural environment is improving. While there'll be a little bit of a lag in terms of from the good monsoon to what you see in LCVs, but we see that giving some kind of traction and growth for us over the next few quarters as well. And third, infrastructure as well as government sector are starting to invest as well. So that could be another area where we see some growth coming in. But like you said, relatively muted environment over the last couple of years. These triggers that I talked about should give us the growth that we're looking at, which is high single digits.
Okay, well, that is essentially the conversation with Mahindra Automotive as far as their sales numbers are concerned. Very interesting chat.